All right, guys. Glad to be back. I hope everybody had a happy Thanksgiving like I did and enjoyed all the football games. My Chiefs lucked out another one. Uh, I don't know if they're team of destiny or not, man. They're getting a lot of injuries and it's really showing. But they're still somehow winning the game. Uh, let's get on to this week's stocks to consider. So when the market opens back up on Monday, uh, here are the four stocks that I'm going to take some positions in. Start out here with Ultimune. I'm looking to buy 30 at 860. And let's go over here and look at their chart. Uh, I've been studying these for several days. Some of them just a couple hours, and then some of them, 6, 7, 8 hours, really trying to dig into stuff. And so here's what I've come up with. At close, it was 856. What did I say? 860. Yeah. Uh, I'm not a long-term hold on this one. I think it's on an upward trend, so I'm going to ride it up a little bit, just a few pennies, and cash in. Uh, I'll just read the business description a little bit here. They're engaged in developing treatments for obesity and liver diseases. The company's pipeline includes next generation peptide therapeutics for obesity and non alcoholic steatohepatitis. Uh, technical. The point is they're focusing in on obesity and liver diseases, especially with the obesity. There's potentially big long-term money in that. The liver, not as much, but again, long-term money. Um, you don't have to be a technical genius on this company to really see where it's going and the potential in it. I've got the 3 month chart up here. Let me go to all. And it's a fairly new stock. Came out right before 2024. And its all-time high was basically 12 bucks. And you can see where they cashed in and took their profits, and then it dropped down. And somewhere in that quarter there, they probably didn't have the greatest of returns, and the earnings per share was probably down. If you look over here, you can see the latest one had some negative earnings per share too. But anyway, this is a pretty easy chart to diagnose. But anyway, so it hits down here in April, and then it bounces up and down a little bit, bounces up and down a little bit. And now it looks like it's on an upward trend. And we are at the beginnings of December here. I'll extend this out so we can look at it a little better. And so through November, it's had a steady increase, hardly any down or anything. This is not the best diligent research for this stock. If you're going to take a large position in the stock, this is something you basically have to know the medical market. I do not. But I can read a chart, and I can see that this is going up. And right now it's at, what did we say, 856? All right. There's no reason why this can't go up to 9 or maybe 10. But with that kind of arc right there, it's a steady buying arc. And it did it for, let's see, so about mid-September or so, here to November, it's been on a nice, steady upward climb, and I think it's a no-brainer at $9. So what I've done is I took my position and said I want to buy it at 860. And then my plan is if it hits 9, I'm going to put in a cancel till order and set it for $9 a share and cash out. Like I said, for me personally, this is not a long-term hold. This is strictly a cash grab. Take the money and run. I don't care if it goes to $20 a share. I'm not going to cry in my pillow that I missed out. I am going to take a little bit of profit and put it in my pocket, enough to buy a steak dinner. I'm just not going to hang on to this. I don't trust medical stocks. I never have. The only ones worth having are the big established ones, and I don't like the way anything in the medicine business does their business. It's some of the most immoral stuff on the planet. Just a cutthroat, immoral business. And yes, they save lives, but so does the agricultural industry. Look how many billions of people it feeds. So, I'm just not big on the medical field. Pharmaceuticals are included in the medical field. So, I'm just going to take a little profit if it hits 9. If it doesn't, I'll hang on to it. I'm not putting a ton of money in on this. The only risk for me that in my standards is that there's no dividends. They paid a ridiculous dividend. Looks like back in 2017. It says quarterly, but I think that was like a special one-time kind of thing or something for all their angel investors and the management to cash in. Who knows? I didn't even get that far in my research. I didn't worry about it. I honest to God, I'm just looking at the chart. That's 90% of my gut instinct on this one is chart. So do your due diligence yourself before you even stick $1 in this damn company. To me, the way that chart's running, the way the demand for anything when it comes to weight loss drugs, if it's a weight loss machine, no, that's a bad stock. If it's a weight loss pill, people are so damn lazy, mentally lazy and physically lazy when it comes to losing weight, and I'm included in that. If I could just take a pill and lose 20 pounds safely, yeah, I'll spend the money. No, I'm not going to go broke and take out a loan to do it, but I'd spend the money and lose the weight if a pill could do it. So whether these are injectable drugs, pill form, whatever, potions and powders, it doesn't matter. I'm just thinking that this is a no-brainer that's going to go up at least a little bit more. So anyway, that's my rationale on that one. It's not normally the kind of stock I even do anything with. Typically on something like this, I would want a stock that paid a steady dividend, even if it's just once a year, just in case. And I've got several stocks like that where it turned out to be losers, but in the end, I still made money because they paid dividends, and eventually I got my initial investment back. So let's go on to the next one. And it's Marvell. Soundhound. Got Soundhound up here next. Soundhound is AI Incorporated. What did I say? 935. I'm buying 20 shares at 935. Not a huge amount of shares. Stock's less than $10. Typically, I would buy 30 to 50 shares in that dollar amount. This one, I do think it's got a lot of upside. AI is the next new thing. Of course, it's not new. It's been around several years. But as far as a investment hot ticket, right now it is the thing. And so man, there's so many AI stocks out there you can invest in. The reason why I like this is because of what they do, and I'll read some of their company profile here. SoundHound AI Incorporated is an innovator of conversational intelligence, and there's several companies that do that, offering an independent voice AI platform that enables businesses across industries to deliver high quality conversational experiences to customers. So, what does that mean? Well, in English, that means that potentially, let's say you've got a bank account and you live in France. You log on to your bank account or whatever, and you have a question. Obviously, to save money, all the big institutions have gone to AI, the little chat assistants and things like that. And this is something in that realm. This is something similar to that. But they deal with the conversational intelligence. So the thing it's not really telling you is that it doesn't matter what language you use, whether it's English, French, Chinese, German, whatever, Spanish. Their programming works for any language. So it has a broader market than some of the more basic AI chat programs and assistants. So the other thing about that, if you think about it, and this is what I've, as a part-time amateur musician myself, I've kind of had my eye on any company or device or anything to deal with, because my singing voice is horrible. My speaking voice is horrible. I'm probably already put you to sleep 3 times since you've started listening. If there is a computer-assisted AI voice program or device that could help me sing, okay, and I'm not just talking about an electronic voice box. I'm talking about something that will take my actual voice, clean it up, and not sound like a damn robot. And the first person that does that is going to make a big splash in the music industry, because people like me, amateurs, excuse me, would suddenly have a very helpful tool when it comes to producing our own music. We can do everything on the computer now. I can replicate just about any and all instruments. I can mix them together myself. I can publish the music myself. There's online companies to help you publish stuff for just, 20, 30, 40 bucks, whatever, for, 10 songs or something. You can do a whole album. But the one thing I can't do is find anything that will help someone actually sing better, if you get my drift. So this is a kind of this kind of AI programming, and not just at SoundHound, but other ones similar to that. They have the capability to do that kind of stuff. Now, let's say there's 10 companies out there that do the same thing that SoundHound does. Go check their stock prices, and you're going to find that they're high. $30, $40, $50, $80, $70, $100 a share. SoundHound's under 10, but it is rising. And you start looking at this chart here. This is a 3-month chart. Let me pop it out here to the beginning of 2024, and you can see it came in. It had a big rise, and people sold off, took their profits. Then it came back up, started to find its level, went down a little bit, found its level. Nice little level right there above $5. It was kind of leveled out. And then here, at the beginnings of October, okay, it was still bouncing around, a little less than 5. Oh, let's get back up to 5 here. And then for whatever reason, it hit $5 a couple more times, but it immediately went back up within the week. And now it's up to 931. So here in just the last month, with all the brouhaha and excitement over, investment excitement over AI stocks, it went from $5 up to 930. So let's take a look at the 1 month chart. And then look at that arc on how fast it's gone up. Here in November, here this last week, right before Thanksgiving, which was a short week, and then we had a little bit of action on Friday for a few hours. That's a hell of an arc. So that doesn't mean it can't come straight back down. There's no reason why it can't drop back down to $8. But with some of these initial bumps out here, I've talked before on some of my videos and on my live stream about the 3-prong boost, and you can see 1, 2, and 3 prongs in this chart. I may be reaching a bit, I admit, this first prong over here, but I've said this before, and it's like 95% of the time at least it comes true for the things that I invest in and at the levels I invest in. When I see that 3-prong devil's pitchfork boost right there, I stick a few dollars in it, and I'm almost always a winner. I'm just almost always a winner. Let's go back to the 3-month chart here. So you can also look at the daily activity level. Small little increments, small little increments, small little increments. And then the AI stuff started to get in the news. And you had the smart people about right in here, first couple of weeks of October, started putting a little money into it. A lot of these people are people like me several years ago, when something new would come along and I would start hearing it 2 or 3 times a day or more. Had to be at least, for me, it had to be at least 3 times. In the news, on the radio, in a magazine, clicking around on the internet. Maybe it's a Yahoo news story, or comes up in the Google feed or something, Anything that said AI in it, once I started hearing that at least 3 times a day, I would quickly look into anything involved in AI or in, that, whatever the subject was. And I would immediately put a few dollars into every stock I could. Even if it meant just only being able to buy 1 share, I would do it. And then watch it for a couple of weeks and look at the overall trend of all the stocks. And if it started going up, I would initiate more positions. So you can almost see the people that do that, like me. You can almost see where they did that. They bought a few shares, checked everything. Yeah, it kept going up. Kept hearing more and more about AI, more and more in the news. All right, let's buy a little bit more. Okay, maybe even take a little profit or something. It went up again. All right, let's take some profit. Boom, took some profit. Come back down here to $5, and then and then suddenly you get the prongs. And these prongs are when there's a news story that's featured on a prominent website like Yahoo or something, or maybe a celebrity or something, like on a TikTok video or something that got viral enough and got more than the average amount of eyeballs and ears listening to the video or news piece or whatever it was. You get that prong, and then people buy, and then they there's a sell-off because these guys are suddenly selling off and taking their profit, and it goes down. But then, the next news story comes out or whatever, and then look at that jump. And it's the same thing. These guys take their profit. And then if you look at the dollar amount and difference between this point here and this point here, and look at the length of it. Okay? Just look at the length of it. It's very similar to this length right here. I hope you can see that on your screen what I'm talking about. So, yes, it's a day-to-day, but I'm talking about kind of the steepness of it too. So it's a profit-taking, it's a profit-taking. A profit-taking could also be a curved semicircle. These are not curved semicircles. Yes, they roughly are U-shaped, but I'm talking about the steepness of it. That is profit-taking by these guys down here. The long-term, well, not long-termers, but the ones that were smart enough to hang on to it and not just do a day trade. And then you have another prong here. Well, by this time, you've priced out a lot of the profit compared to its normal $5 share price. So the prudent investors are not wasting a bunch of money, not wasting, but they're not risking tons of money on something that they see, well, it's only probably going to go up another 10, 15 cents, and then it'll drop again. And eventually drop down to $5 or $6 and level out. That's what they're thinking. Well, so far this one isn't doing that. It's had decent jumps. So this is the holiday week here at the end of November. So it's kind of iffy. You really shouldn't trust a chart based on this short week like it is. But let's see what happens next week. I'm betting it's going to go up. And for me, this is a long-term stock only because of its low share price. There's other similar companies that do similar things out there, but check their stock price, $20, $30, $40, $50, $60, $70 a share. At less than $10 a share, yeah, I'm going to get 20, see what it does. If I can get it for $9.35 at the beginning of the opening of the market there, great. If not, I may go up to $9.50 at just deliberately overbid a little bit, just to make sure I get some stuff, because I think that will easily go to 10. Again, do your own due diligence. I'm just some nutcase making a video. Don't trust me. I'm not a professional. I'm a pure amateur that likes to make money and has done well. But, do your own due diligence and everything on this one. But I think it's a fairly safe bet, strictly gambling bet, so to speak, to get up to $10. So, roughly a 70-cent increase on a 930 stock. That's a decent percentage. And, I don't have that kind of money, but sinking a couple thousand in, if I had it, I would do it. Well, I don't have it. I've only got a few hundred that I can risk. So that's why I'm only doing 20. But, depending on what it looks like next week and how it acts, I may put some more in on that one. So, anyway, all right, let's go on to the next one. And by the way, no dividend. No dividend probably ever on this stock. So risky. This is not the kind of stock that I go long term, as in hold on more than 6 months to a year or more. For me, it's not. I would amend that situation if amongst all of the similar companies that do similar programming and stuff, if SoundHound would be in the top 3 of any sector, subsector of markets, I would keep it for long term. You always keep the top 3. Can't go wrong if you got the number 1. Number 2 and 3 typically at some point merge or get bought out or something. Something happens to them. Everybody below 3 is risky. They either go out of business or they get absorbed hopefully by a bigger company that pays dividends and has some security to it. But that's not why I buy stocks, is to get them merged. That's just a happy circumstance if they never make it to number 1, 2, or 3 in their sector. So anyway, all right, let's get rid of that one. All right, here's Marvell. I'm going to go 10 shares at 92.80. Marvell, and I'll read their thing. It's not Marvel, it's Marvell. Expensive stock. Marvell is a chip designer focused on wired networking, and that's the key word in this whole thing, is wired networking, where it has the second highest market share. Marvell serves the data center, important words there, carrier, enterprise, automotive, and consumer end markets with processors, optical and copper transceiver switches, and storage controllers. All right, this is one of the most boring businesses you'll probably ever come across. They build the physical, what do you want to say? The pipes and the tubes and the wiring and everything else that connects these data centers together. Okay, so data farms. So like server farms. Okay, and so I saw several articles and a couple things, short video, news clips and things that were talking about how Amazon is one of their customers, or it may be a customer in the future. But anyway, as an example, Amazon is going to have server farms all over the damn country, right? You never keep your eggs all in one basket. You spread them out. And so you can buy cheap land out in the middle of the desert or whatever, and then build you a big old building. Build it high enough elevation. It's easy to keep cool. You have the environment help you out with cooling, heating and cooling. And then you you have to have something that connects you to the internet, right? Well, they're not going to do it off a damn satellite. These guys want big, heavy-duty fiber optic networks, big fat copper wires. They handle a lot of information, and it needs to be. It's got to be foolproof. It can't go down. It can't have this stuff failing. And so you see one of the things where it says optical and copper transceivers. So, they're dealing with fiber optics. They're also dealing with big, thick, high quality copper wiring and stuff. And so that's what Marvell does. They're a nuts and bolts kind of company. This stock is not going to jump up, $20 in a day. It's just not that kind of company. Let's do an all-time on them. And you can see here at the beginning of 2024, since they've come out, they've had a nice, decent rise, right? 60 to 92.68. Okay. And what was it I said I wanted Marvell at? 92.80. So this is a stock that they paid a dividend back in October there, 2024. So they pay a dividend, but it's small. It's just not a huge dividend as compared to the price of the stock. 6 cents on $90 stock, that ain't very damn much. So this is a stock that gets overlooked a lot. It just doesn't have the good dividend to stock price ratios and company valuations and everything. I don't usually put too much stock in some of the smart score stuff here that Ally uses, but some people do. I don't. But I looked at their average price target over here. The consensus opinion of the analysts say strong buy 96.87. So if you're looking for a stock that you want to gain 6, 7, 8%, um, fairly easily, frankly. Uh, I think you can get it. And the reason I say that is because if you think Amazon is the only one with server farms and needs the guys, when they hire these big construction companies to come in and do these projects, Marvell is one of, 1,000 subcontractors when it comes to parts and the company that brings the concrete in and, anything and everything they got to do to put these buildings and complexes, these centers together, these huge warehouses together. Uh, you know, Marvell's just another one of those companies that can do it. But as it said down here in your thing, they're second highest market share. These guys are not pushovers. These guys are the Pepsi compared to Coke. Okay, they're huge. This company is not going out of business tomorrow. They're going to be around, but it's not sexy. It's not AI. It's not any of that stuff. But this is the nuts and bolts, the backbone of these huge server farms. So you think of all these different companies like Meta and Apple, the Googles and the Microsofts and stuff, the Facebooks and everybody else. These are one of the companies they go to get the stuff done, to get their server farms and everything going. So it's a solid company. I'm not worried about this company going out of business tomorrow. Even if it's got a crap dividend, but it pays a dividend. So even if I get stuck on this thing, if this thing dropped down to 85 and never went back up to 92, I'm not going to cry on my pillow because they pay a dividend. I'm still going to make some money off of it. It's just not sexy. But man, again, I love looking at charts. I'm a chart guy. And it's just worked so well. You start to look at this stuff. All right, let's look 1 month. That's the all time. Let's go to 3 months. All right. Let's see. Yeah. Okay. 1, 2, 3. So back here in August, it dipped down to a little over $55 a share. You can just kind of look at the average in here. It was kind of a $70 stock. I mean, look at right here in the middle. Yes, you have some highs. Yes, you have some lows. But you look in here at the mean or the average, it's somewhere here in the $70 mark. Well, back here in August, man, it dipped low. So, some of the stuff I looked at, some of the performance it had and everything was down. And of course, you had things going on around the world. And so, but it bounced back up. And here, look at this mirror spike right here. All right, you had a spike up here to above $75. People took the profit. Went back down here to just above $65. $10 difference. That's obvious profit taking. And what did it do? It came back up here to the average or so, and then went up a little bit. And then you see this small up and down, small up and down. It created a new average, basically. Well, that new average is about $73, so it gained a $3 average, so to speak. But then, here in mid-October, it started bumping up a little bit more. Well, why is that? The AI stocks, anything technology like that, it brings everything else up. The old thing about the rising tide. All ships go higher with the rising tide. And so it's getting the positive effects of the AI technology stock boost. People looked at bank stocks and energy industry stocks, and the market hates indecision. It doesn't like it when it's not sure about what's going to happen. Well, technology is kind of the old reliable now. Uh, if you invest money in good quality companies, and I'm talking about the big money, okay? Uh, the whales out there, they're like there's better growth and stability in some of the technology stocks. I think that's what some of this is. And so you had a nice little gain up here, and so now we're look at this. Look at this new average is up here at 90, or maybe even a little bit higher, $91 maybe. So it is really raised for this particular stock. It has really come up, and anytime, keep an eye at it when you're looking through stuff. Keep an eye out for those words like server farm and things like that. And if you start seeing that a lot, then go back and look at Marvell here and look at the chart and see what's happening to it. And I bet you it's going up too. And that's kind of what's happened for me. I kept hearing about server farms and this kind of stuff, and oh, they're building one out here in New Mexico, or they're building one in Nebraska, or they're building one in North Carolina, but it got delayed by the hurricane. And so, or right outside of Nashville, something like that. And then you start hearing words like Meta, Facebook Meta, uh, Amazon. You start hearing these bigger name companies, tech stock companies, Apple, whatever. You start hearing these things associated with that, and if you hear more of it, I bet you the stock's going to go even higher. So I'm saying that this new average on this one is about $91 now. I think it's going to go up. I think it's going to go up to at least 94, maybe even $95 here shortly, to the next week or two. To me, this is volatile. Just in the month of November, believe it or not, to me that looks pretty volatile. I can see some profit taking here and there. To me, some of this in here looks like day trading activity. Not institutional investment. It looks like day trading kind of stuff. So I'm not going to go crazy on that. So for Marvell, I put in 10. I only wanted to do 5, but I was like, screw it, let me do 10. If it goes up even 20, 30 cents, then I may sell so I'm not exposed. I hate going over $1,000 unless I know it's a sure thing. But yeah, I'm getting 10 at 92.80. It's 92.68. So I think that's a fairly safe bet. I'm not the most confident on that. I'm like 80 out of 100. 80% confident in that. I don't think if it drops back down, let's say it dropped back down to 85, again, I wouldn't cry in my pillow too much because they do pay a dividend. So eventually I would get my money back. I'd have to hold on to it a long time. But I think this stock's going to go up. I think within a year it'll be at 120. These guys are saying, 96.87. I think that's under. I think it's going to go higher than that. And the reason I say that is the price of copper and other things. Whether President Trump does tariffs with China, Mexico, it doesn't matter. We have a very capable copper mining industry in this country. If we have to use our own copper, that will be beneficial to America, but it will raise the cost of copper. So copper will spike through the roof. But even if he doesn't do any tariffs against China and some of these other countries that mine copper, I still think it's going up. It doesn't matter who's president. I keep telling this to people. It doesn't matter. The only thing that matters who's president is energy production. And then, defense and some others. But when it comes to money, okay, what really matters is the amount of taxation and Oh, I almost said it. It doesn't matter. The point is the cost of gasoline. Cost of gasoline is what drives any economy in the modern world. Um, the cheaper gas is, the more plentiful oil is, the cheaper gas is, and the cheaper raw materials and everything else gets cheaper because of transportation costs. And you can debate that all damn long, but you're wrong if you say it's not. So, you know, that's the old man to me that's been around a while and knows stuff. Uh, Raw materials, okay? It, it costs a lot of money to mine copper, and it doesn't matter where in the world that is because they have to use giant machines that eat up a lot of diesel to run and process this stuff. And then half the time these mines are out in the middle of nowhere, so there's a lot of transportation costs that's involved in keeping these mines running and starting them up and everything else. So to get back to Marvell, the cost of producing, equipping, and getting these data farms and data centers and whatnot running is expensive. What's something you need to keep in mind is that this is the startup costs. If you wanted to compete with Marvell and do what they do, only cheaper and better, the startup costs to get the engineers, to get the equipment, to get your own patents and everything else and trademarks and all the startup cost is prohibitive for this kind of business. It's not worth it to gather $1 billion in stock, capital from stock sales, and then try to start up from scratch a business to compete against it. It's just not worth it. You can make more money with that same $1 billion in another industry. And so Marvell is, and what I'm getting to is Marvell is a solid company in this sector. It's a safe bet, so to speak. And with the increase, with the growth and demand in that field, whoever is number one or number four or whatever, if they can't handle it, Marvell will take what number one can't handle. I don't care if number six or number seven, underbids, Marvell or whatever. If they're too small of a company to handle the big jobs, they're not even going to consider them. They'll go ahead and pay a little extra more for Marvell. So what I'm getting at is I'm not worried about my money when it comes to this one. The only concern I have is that if it doesn't increase up to, let's say, 94, 95 bucks, where I'm going to cash out and take a little profit and be happy about it. If that never happens, if it drops back down where they still pay a dividend and they're so solid, I'm not worried about them going out of business. So anyway, that's my little thing about them. So let's go to the last one here. So Symbiotic. Let's hop down here and find out what they are doing. Symbiotic is an automation technology company that develops technology to improve operating efficiencies in modern warehouses. Group develops, commercializes, and deploys innovative end-to-end technology solutions that dramatically improve supply chain operations. All right, we don't need the rest of it. Well, actually, we do. Okay, automates the processing of pallets and cases in large warehouses or distribution centers for some of the retail and wholesale companies in the world. So they do United States and Canada. Key revenue is generated from the United States. Okay, so one of the things that, and I'm not associating Symbiotic with Amazon, but one of the things that sets Amazon so far ahead of everybody else is their logistics, their distribution system. Okay, and theirs is most likely proprietary. I'm sorry about that. I'm going to go 10 shares at $26.95. All right. It's at $26.90. So I'm going to overpay by a nickel when it opens just to make sure I get some shares. This company is risky. And you can kind of see that here in the smart score thing over here. They think that long term it'll be eventually up to $40, and it may very well do that. And it almost did that. Let's go to a 1 month chart on this thing. So you can see a couple weeks ago it was up there. Boy, it had a nice rise, and people took profit and it leveled out. And they were like, let's try to replicate that. They bought a little bit more. Oh, it did. Okay, let's it went up $1.50 or whatever. Let's take some profit. And then for whatever reason it dropped like hell in this last week or so. So that's a hell of a drop, though. 37.50 down to 25. No, 24, 23 bucks. That's a hell of a drop. So what happened? Well, I don't know. I can't find a reason for that big a drop, but it doesn't matter. So let's go back and look at their dividend. Last dividend they paid was 2007. They don't pay dividends. This is a stock that I typically wouldn't mess with. And the only reason I'm going to take a position in this stock is that that dead cat bounce, so to speak. I think it's going to come back up. And the only reason I say that, again, I'm looking at this chart. This is a short term, 1 month. You can see where on these individual day trades, on these daily trades in here, it kind of made an even number right in here, about $23, $24 or so. Nice little average price right in there. And then it jumped. It made a nice little average in here, 27, 28 bucks. Then it jumped. Then it came back down. Then it really went back up, and it set a little miniature average up here. But I'm going to ignore that one because that's not enough data points there. It's not enough days in a row to really establish a small average or a long-term average. So it dropped back down. Where did it hit? It hit more or less. Let's zero in on that. So there for a couple days, it hit about $23, $24. And that equaled this average that was out here. So, I wanted to see the all-time on this is very, very short time frame. So, throughout the year, it's kind of been a downward cast. But if you look at this chart, all right, went up, down, up slightly, and then way down, but not all in one day. It was over several weeks there. Get down here in July and August, bottoms out, and then it makes a slow climb back up. And then here in November, went down a little bit. Okay, well, let's go back to a month chart and look at this thing. And so that smooth curve that it showed is now not so smooth. You can see the little jags and creeks and everything in it. Peaks and jags. My experience looking at this thing says that this thing's going to go up another 50 cents or a dollar. And then who knows what it'll do after that. But I don't care. I don't care. What I'm seeing is 26.90. I'm putting in at 26.95. I think that that can go up to $27. At least another 10 cents. I think it'll go more. I think this thing may hit 28. I'm really sure it's going to at least hit 27.50. May go up to 28. This is the stock I'm the least sure of out of the four we've looked at. It's also not that sexy a stock as far as a company. You know, the thing they do is the conveyors, the internal logistics. So you have, where you have the little automatic robot forklifts. You have barcode systems, and with scanners and all this other stuff for conveyors and warehouse stock and everything else. And I don't know how to put this. Let's go back in history a little bit. Just a short term, 8 years ago. Donald Trump comes in, starts doing some things, dropping the price of oil because he I don't know if he got rid of some tariffs or all the things he did, Keystone Pipeline, all that kind of stuff, right? Price of oil starts coming down. Suddenly these companies have short-term and long-term a little bit more money. So they start making capital improvements. So, and I can give you this real-life example from the Coca-Cola factory here in Kansas City, based in Lenexa, Kansas. They had some money, and so they always plan out some of these capital improvement projects, several years in advance. They're like, okay, let's do this one this year. Next year we'll do this. Next year we'll do that. And so if they got the money, they do it. Well, we had some new machines that we'd wanted for 20 years. We'd wanted these new machines. Suddenly we got new machines in. And then they started, they fixed the roof that was leaking a little bit here and there. Small minor leaks, but they were annoying, So anyway, they did some capital improvement projects. But they also had money to do some of the smaller non-capital improvement projects. And so, they fixed some drains, put some new flooring down where the concrete had cracked and stuff like that. So just overall, we improved that factory. That's just one business out of the thousands of businesses in the Kansas City area. Kansas City is just one of hundreds and thousands of cities across this country that have, industry. So you can imagine the scale of suddenly these companies are spending, $1,000 to, $10 million on all these different projects and things. One of the things that a lot of companies out there, and I don't care if they're a box maker, widget maker, or something as big as Amazon, they need modern, efficient equipment. They can't always buy that stuff every year, and they can't buy it piecemeal. Oh, we'll buy. We need 10 conveyors, but we'll just buy 2 this year. That's not typically how these things work because of the tax implications for business and everything. When they do capital improvements, they do all 10 conveyors at the same time, not just half or a third. So Suddenly, these companies all over the country for the next 2 or 3 years were able to do that kind of stuff. They had money in their pocket because they were saving so much money off their transportation costs. And that's a huge expense for a company like Coca-Cola because we ship stuff all over the place. They may make something in Tennessee that gets sold in Texas. I mean, the different bottles, different shapes and sizes of cans, the little miniature cans and things like, stuff that gets sold in different markets and stuff because of, cheaper labor cost here. So the cost per case. If it's cheaper in Lenexa by 3 cents a case, I guarantee you that they're going to pay the money to ship it from Lenexa down to Texas and sell it in Texas because they know over the space of a year, you're talking several million cases, millions and millions of cases times 3 cents adds up to real money. And so it becomes worth it. If the gas prices are too high, it eats up all the profit. And so instead of being 3 cents cheaper, you'd have to be 30 cents cheaper before they could even consider shipping stuff all the way from Kansas down to Texas. So you can see where the price of gas really makes a difference. Now, let's get here to symbiotic. If what happens at the beginning of the first Trump presidency happens the second time when it comes to the cost of energy, and I don't just mean the price of gas, I mean the cost of energy, he's going to come in and his people are going to do the things that's necessary. They're going to increase tariffs on this. They're going to eliminate or decrease tariffs on that. They're going to do all kinds of stuff. And in the end, it will be an economic boon in one way or another for the energy companies, whether they produce gas, oil, refinery, whatever, or it's nuclear power or whatever. Okay, the across the board energy stuff. This is the kind of company that will gain from that because, again, like I said, these companies suddenly their energy costs are low, and so they're like, okay, we're going to have 280,000 extra dollars this quarter. And it looks like that's going to hold, so we'll have close to $1 million by the end of the year. Let's go ahead and get that. Let's get with Symbiotic and get a bid for, all new conveyors, forklift charging racks, battery, more efficient lithium battery, whatever. Let's go ahead and get that. Let's get an estimate from them. Let's get a bid. And this is the kind of company that's going to gain from that stuff. It's what's called a secondary effect. The initial effect from cheap gas is low transportation costs. And so you directly, when you charge, if you're like Coca-Cola, when stuff is sold to the grocery stores and things, convenience stores and stuff like that, you may be able to drop it a nickel or a dime or a quarter or whatever. Well, they will drop prices to the customer. This 10 and 11, $12 a case price for pop is preposterous. I know how much it costs to make a case of pop, and it ain't anywhere near that. And so, that didn't happen until this last 4 years. That was before, that would have been after the last election, and then so it was after the COVID and everything settled down. The price of pop went down when people started going back to work and the COVID restrictions were relaxed finally. The price of Coke went down a little bit, and then out of the blue, it seems, it started going back up. And you can get to a big debate and the reasoning and why fares as to why that happened. But I'm just saying, from the pop industry, I know that's what happened. And none of us understood it. I know that companies like Coca-Cola and PepsiCo and some of these other ones, they were like, Dr. Pepper Snapple or whatever it's called now. they basically looked at their product and said, we haven't had a real increase in price in our product for 20 years, so it's time to do that. And so they did it. Some of them did it, some of them didn't, whatever. But overall, they all raised their prices. The only way, now that they've raised their prices up to a new level, and this goes hand in hand with the inflation, I understand that. But the only way that's going to come back down, realistically, and in any time frame that actually matters to you and me, the consumer, the only way that's going to bring that, the only thing that's going to bring those prices down, whether it's pop or food or whatever, is the price of gas goes down, so that the transportation costs are reflected in the final cost of the goods and services, and they'll come back down a little. They're never going back. You'll never go back to the way it was. That's the problem when you elect the wrong people that do things for an ideological reason and not a financial reason, something that actually matters and affects people, instead of pie in the sky, reasoning. When you make decisions like that, the problem is you can't undo them. And so, do I think prices are going to get better once Trump actually gets in and they start doing some fiddling with stuff and eliminating this and changing that and whatever, and raising this and lowering that? Yes, I think overall things will come down. I think gas prices will come down significantly enough that you'll notice. It'll never go back to the way it was. It just won't. Because there's nothing forcing businesses to do that, even if they can still make a profit by dropping gas down to $2 a gallon. It's not going to happen. They might drop it down to $3. So like here locally, it was $3 and I think it was 39 cents or something like that the other day when I filled up. It could go back down to $3, but I don't think you'll ever see it at $2 again. Those days are gone. But that doesn't mean they still couldn't do it and still make a profit. They're just not going to do it. They'll go down some, but they're not going that low. There's no reason to be in that big a gas war. Anyway, long story short, this is why I see that this company has a decent future. I'm not going to say a bright future, but a decent future. And that on the short term, which is the only thing I'm investing in this company, is for a short term, small gain. Remember, I was doing 20 shares, 10 shares? 10 shares. So 10 shares at $26.95. It's currently at $26.90. I think it'll easily go to 27, maybe 27.50, possibly 28. And anything basically above $27 here in the next 2, 3, 4 days, if it hits above that, as soon as I buy this stock, I'm going to put in a sell order, a sell limit order, and pick a number depending on how fast or how low it's going, and sell it, take a very small profit, just a few dollars, and then I'm going to watch it and see what it does. This is not the kind of stock that you should day trade on. You want to day trade stuff, go day trade Walmart or Amazon or something like that. Don't day trade this kind of stock. This is for a slower, more practiced approach to make a little bit of money. That again, they don't pay any dividends, so you don't invest $1,000 in this stock. Invest a couple hundred at most, and if you make $30 off of it, be happy. Take your money and run. And then take that $30 and go buy Palantir stock or something. I don't know, something better. All right, for those people that are still watching for whatever freaking reason, let's I'll show you a couple of them here that I'm gonna I'm gonna do a recap video because I know you didn't see my other ones. But Big Bear AI, I was just looking to make 30, 40 bucks off of this sucker, and it jumped so much. You know, I'm up 8%. I'm up 177 bucks. I just can't believe how much that jumped. I'm thinking I'm going to hang on to this one. You know, I may sell a little bit of this, but I'm thinking I may hang on to it. I went in at $2.12, and it's at 2.28. I think it's going to go higher. I looked at the chart on this thing, and I just, you know, we can look at it real quick if it'll even show it. I don't know why it's not showing it. How about a year? There we go. Let's do Vertex here. So there's a better one. So you can see it's had a nice steady increase here. This was a $1.50, $2 stock for a long time. I couldn't believe it. Will it give us a month now? Ah, there we go. Yeah, it's had a really nice increase. And then if you start looking at the trend, and look, here's that devil's pitchfork. 1, 2, 3. I think it's going to go higher. You know, it's at 229 or whatever. 228. I wouldn't be surprised if this went up to at least 250. I really don't. So anyway, that's Big Bear. It's done really nice for me. Where's my other one? That Innodata. Yeah, here's one I told you guys about. Only bought 10 shares. Went in at 37. It's at 41.06. I could sell it right now and make 40 bucks. So not bad at all. It went up a lot higher than I thought. I was gonna be happy with 10, 15, 20 bucks at most, and look at that sucker. Went up 11%. Very happy with that one. Quantum, another one, went up higher than I thought. I went in at $6.35. It's at 7.06 now, up 11%. You know, I'm up 355. I still may go ahead and pull the trigger on that one and take the profit. That's a lot of money for not the increase that I wanted. You look at Palantir here. I actually got in cheaper than that, but I bought extra stock. I initially went in at like $27 a share, and then I bought more, and it ended up being $33.30 as the average. And right now it's at $67.09. So I'm up 101%. I'm up 5,800. I am not going to sell. I'm going to hang on to this long term. I called this stock 3 months ago, and actually maybe even before that, just because I saw so many people using the Chat GTP and all that other crap on TikTok and you know, Facebook and whatever videos, YouTube videos and stuff. And when I started looking into stuff, Palantir is the name that kept coming up because it had contracts where the other ones were hoping for contracts. These guys actually had contracts, and they were quickly becoming, you know, the go-to stock when it comes to that, or the company when it comes to that stuff. And remember the number 1, number 2, number 3 rule I have. You know, if it's in the top 3 in any sector, you want it. And Palantir's up there. It's either number 1 or number 2. Yes, there are better. Well, I just shouldn't say better. There are other AI stocks out there that may do more business and whatnot. Palantir, to me, looks like it has the most growth. And it has a solid footing in that sector. And to me, that spells growth. That spells long-term growth. That spells high stock price. Whether they ever pay a dividend or not, it doesn't matter. I think they're going to be great. So I'm hanging on to it. I'm going all the way with it. I'm not selling that until it really has to start coming down quickly. And if it does, it doesn't matter because I've got it up so high above my original start price. If that dropped down to 50, I'm going to cry all the way to the bank. So anyway, yeah. So quantum computing to me is the future. Just like AI was the future 5 years ago, but now it's AI is the reality, right? And people are realizing that. And so now they're investing in AI. Quantum computing is the future reality, and that's why I'm investing in it now. I got in at $6.35. It's at 706. I'm up 11%. I'm hanging on to this one. I think it's going to do great. I think it's got big things in the future. I am not a professional. Don't bet the farm on my word. Do your own research. Don't be stupid. Don't spend $10,000 on buying this stock and then the bottom falls out and you blame me. You want to bet, want to throw a couple hundred or whatever in, do it. But don't go nuts. Basically, that's it. I go in and out of a lot of these stocks, and that's why my individual portfolio here, half the stuff in here is old defunct stocks that I ended up breaking even on at worst, and now I either can't trade them or they're out of business or delisted or whatever, but it doesn't matter. I made my money off of them a long time ago. So anyway, that's it for this week. I'll have another video next week. Probably come out Saturday or Sunday again. And we'll see what I'm looking into then. How's that? Alrighty. Well, thanks for watching, guys. Hope you learned something.